This video is brought to you by public.com/meetkevin, where you can get a free stock. More on them later. Hey everyone, me Kevin here. In this video, I'm going to outline my complete plans for the next 6 months in this crazy stock market that we have, because I think we could potentially face the fear of a recipe of disaster, and I'm going to explain that. I'm going to talk about COVID, I'm going to talk about my thoughts on crypto, stocks, safety stocks, recovery stocks, when to buy, when to potentially sell, what to do. These are just my opinions. Obviously, this isn't financial advice. And if you want more of my opinions, I have amazing programs linked down below that you can get 40% off on using the new coupon code STOPTHEBULLSHIT. See that link down below. Okay, folks, let's talk about what we know first, and then we're going to get into a little bit more speculative stuff. And the reason I want to separate this is because I want to make it very clear what's fact and what's not. So we're going to start with fact first, and then we'll get into the opinion, okay? So facts. Last time we had COVID, the first COVID breakout, we had an abrupt sell-off of everything. We had massive fear, massive uncertainty. Nothing was safe. And something for you to really download into your investing mindset is the best time to buy stocks is when there's blood in the streets. In other words, when people are literally fearful. So literal fear in the stock market is a good time to buy stocks. This is totally different from actual blood in the streets, because last summer we had a bunch of riots and the stock market was soaring. I literally mean uncertainty to the point where people are like, oh my gosh, and everything's selling off like crazy in the market, right? The same thing actually happened right before the election. There was so much uncertainty right before the election. It didn't even matter who became the president when we had our election. It just mattered that somebody became the president rather than having uncertainty. The stock market hates uncertainty. So after we had our big sell-off, tech recovered for the first 4 to about 5.5 months with pretty much straight gains from the bottom of the market through around September 4th, when the market started being a little bit more shaky and we started having a tech sell-off. We saw EVs, tech, high multiple stocks, SPACs, didn't matter. Tech was pretty much safety for 5.5 months. Things just went nuts. These are things that happened last year. We also know that recovery stocks moved closely with the course of the virus. We had a plummet in March and April of last year, with gains in May as the recovery set in and the pandemic seemed over, people were going out again. But then we had Memorial Day in June, and all of a sudden the recovery started stalling, and we started seeing recovery stocks falter. And it wasn't really until the vaccine was announced on November 9th that we had a real boom in recovery stocks that lasted all the way through around the end of May to June of this year. That's kind of when they all started in sync plummeting due to Delta fears. In fact, if you look up when Delta search trends started picking up, they started picking up around June 1st. So the market is already starting to price in Delta concerns into recovery stocks. That's why so many of the recovery stocks have just been bleeding down 2%, 2%, 2%, over and over and over again. Nothing abrupt, just a slow bleed out. The market is preparing already. Now, we also know that during the pandemic, people spent a lot of money on stuff. Apple computers, iPads, phones, Peloton bikes, refrigerators, appliances, furniture, Etsy crap, you name it. Kathy Wood personally believes that people have enough stuff, that people are stuffed out. And we're going to come back to stuff because stuff is going to be a part of our opportunities hunt, or maybe not. But we'll talk more about stuff in a moment. Now, additionally, we know that right now, 79.4% of adults over 65 are vaccinated. So disproportionately more older folks are vaccinated. That should lower the death rate for any form of COVID, whether it's the Alpha variant or the Delta variant, whatever. We also know that Delta is about 2.5 times as transmissible as the Alpha variant of COVID. We also know that the United Kingdom just had a surge of the Delta variant, but their cases started to subside very quickly. And we want to look at why that happened, and is that potentially a sign for the United States of what we could go through? Are we setting up too much fear now for unnecessary reasons, only to have a small peak and then essentially a collapse again? Take a look on screen right now. You could see here, we had our main wave over here of the COVID Alpha variant, and of course initial wave, second, third wave, so to speak. But this was really our massive Delta wave here. And we can really see this decline pretty quickly. In the span of a few weeks, we had the Delta variant at the end of June skyrocket through around mid-July, and the last couple weeks it's been plummeting. And so it's worth comparing the United States to the United Kingdom a little bit. And when we look at some statistics, we see that in the United Kingdom, 88% of adults have received at least one vaccine. 73% their second dose, but 88% having at least one dose is pretty good, since the first dose does probably the most for efficacy in terms of being protected against getting severely ill with COVID. We all know at this point that you could still get sick with COVID and still spread COVID. We understand that. There's no disputing that. This is not going to be a video trying to convince you to take the vaccine or not take the vaccine. That's your personal choice. But what this does mean is that the United Kingdom is almost at 90% herd immunity, which right now Bloomberg is reporting that the United States, in order to avoid big fallout from Delta, needs to be somewhere between 80 to 90% herd immunity. The United Kingdom has this, and because they have this, we saw a spike in Delta and a very quick rapid decline in Delta, which is very, very good. They basically got away without having to go to kind of strict lockdown measures again, or any kind of draconian measures to try to limit the spread because their hospitals were getting overflowed. They were able to control it because they have more herd immunity. Unfortunately for the US, only 70% of adults have one dose. Bloomberg says we need to be between 80 to 90%. The United Kingdom has that. The United States does not have that. And only 60% of adults, excluding children, because you might see the US population is about 50.3% vaccinated, but that doesn't include children. 60% of adults are fully vaccinated. 70% have only had one shot. Okay, so this explains why all of a sudden Joe Biden and Congress folks and political leaders are all going, folks, get the vaccine. People are freaking out because in politics because they see the writing on the wall. We're not at the herd immunity levels we need to be at. There's a significant population of folks in America who do not want to get vaccinated. In fact, if you look at Gallup polls believes that at least 20 to 25% of Americans are likely to refuse vaccination. And then Gallup didn't give these reasons, but I'm going to impute these reasons. I always want to separate stat from my opinion. I believe a lot of folks aren't getting the vaccine in that 20 to 25% group because either they've had COVID, they believe it has not been studied enough, medical reasons like doctor's orders. There are actually some doctors who are saying do not get the vaccine for certain people. This makes sense. I'm not a doctor and I'm not professing to be a doctor, so I'm just providing that as a reason. And then, of course, the fact that people are still getting sick with the vaccine, albeit maybe not as severely, doesn't really help sell the idea of the vaccine, right? Like vaccinated people still having to wear masks, get COVID tests, and still go through the same inconveniences as potentially unvaccinated people, takes away a little bit of that selling factor for that vaccine, right? So unfortunately that helps, or I'm sorry, unfortunately that hurts in more people getting vaccinated, which is not so good for the market. Okay, so now we've set kind of a baseline of background facts, things that we really want to understand and be on the same page about so we can kind of start planning for the future. So we've gone through facts. Now let's go through my opinions and how this market might function. This is not financial advice. This is not guaranteed to happen. If this is totally wrong and you lose lots of money, don't sue me, bro. It's your fault. I made it very clear. So I believe there are three important factors to consider when we think about how the market might react to Delta. And the first is, are you part of the amazing programs linked down below, and did you use the 40% off coupon code? Okay, I'm sorry, I had to do it. That's not one of the reasons. Okay, the first of these is, look, we know that the Delta curve is promising with around 88% herd immunity, right, with 88% of folks having one shot. This is very good. However, the United States is not within this 80 to 90% range. This is going to create a problem with factor number one, fear. What did we talk about at the beginning of this video? Markets tend to react more to fear than they do to actual deaths or reality. This sounds absolutely terrible, but remember, folks, when COVID first hit and we had no idea how bad this pandemic was going to be, was it going to be like the plague, the bubonic plague, like what is this? Oh my gosh, it's from China, we know, oh my gosh. There was so much fear, so much uncertainty. People were going to grocery stores in hazmat suits, no idea who, but people were going to grocery stores in hazmat suits, and there was so much fear, the market reacted very poorly. But when you look at the rest of the year, even though COVID cases were going up, even though deaths were going up, and we had these extreme waves of just utter madness in hospitals with many deaths and many COVID cases, the stock market actually did surprisingly well for the rest of the year because the blistering fear the stock market had was gone. So, can we get back, or would we get back to any kind of blistering fear, and how does that factor in to our Delta projections? Well, first, when I was thinking about making this video, I was thinking, should we evaluate how bad we think Delta is going to actually get? Like, how many cases do we think there are going to be? Like, how many people are going to die? And then I realized, no, we actually don't have to do that. That is not important at all, because again, look at what happened last time in the pandemic. The stock market cared about fear more than what actually ended up happening, because when reality played out, the stock market didn't really care. The stock market cared more about fear and uncertainty than it did about what actually happened. So fear is the #1 most important ingredient. And what helps accelerate fear? Shutdowns. Talk about lockdowns and shutdowns. This morning, we had one of the vice presidents of the Federal Reserve say that potentially we might be seeing school shutdowns come back. Okay, this is very bad. This is a wonderful way to start the fear gauge going up. And it makes sense why some of the moves we're seeing in the stock market today are what we're seeing. I'll explain and we'll talk about those in a moment. But school shutdowns coming back would be very bad, because it would mean less workers available to work again, potentially means higher wages and inflationary pressures. But put inflation aside for right now, school lockdowns are the precursor to other forms of lockdowns. What if manufacturing gets locked down or shut down? What if businesses get shut down again? What if restaurants get shut down again? And the question here isn't so much a matter of, oh my gosh, those things might happen. It's just the fear that they might happen is probably going to be enough to start freaking out the stock market. So we really want to monitor where the dialogue is going with shutdown talk. Not necessarily actual shutdowns yet, but shutdown talk. Because if we get lots of shutdown talk, and then we hit peak shutdown talk, then that might be an opportunity to sort of buy the dip on recovery, especially if shutdowns don't actually happen. Now, if they actually start happening, we still want to pay attention to how much talk is happening about future shutdowns or extended shutdowns. So the big game that you want to play, and write this one down, okay, is monitor the media for shutdown talk. An easy way to track shutdown talk is actually, don't use the word shutdown, because then we think of a government shutdown, so it kind of skews the numbers a little bit. Search Google Trends for lockdown. Okay, lockdown. Look at the fear here. Look at this, folks. Look at this insane spike in lockdown talk when we had the pandemic get started in the middle of March of 2020. Okay, this lockdown talk was pretty much directly correlated to the bottom of the market, which is crazy. Like the peak of this lockdown talk here is pretty much close to March 23rd, the bottom of the market, which is absolutely crazy to think about. Now, go to look at this sort of next surge that we had, which was sort of November. This is really when cases were starting to get extreme and there were palpitations in the market, but it was nowhere near as bad as this kind of lockdown talk. So what we're really looking for is the current increase in this lockdown talk to exceed these levels substantially and probably get closer to like the relative strength of, I would say at least 50, at least a relative strength of 50, which would mean the line would be somewhere up here. So imagine another sort of triangle over here. That's kind of what I'm going to be looking for as my gauge to maybe consider getting into recovery stocks, while at the same time Delta cases or COVID cases move up. If all of a sudden Delta goes away, then this strategy needs to get remade, right? Then forget about it. Then forget this strategy. You're not going to see lockdown talk skyrocket anymore. As long as Delta keeps getting worse, you know, the Florida stuff, New York has more mandates, whatever, lockdown talk's probably going to go up. So we want to keep an eye on lockdown talk. Very, very, very important. Okay, the next thing that we want to look at is unemployment expiring September 4th. So when unemployment expires September 4th, we want to see if this unemployment expiration is coupled with school lockdowns. If we have school lockdowns and unemployment expiring, then there'll probably be immediate calls in Congress for an extension of the unemployment boost. An extension of the unemployment boost is going to very quickly raise debt and inflationary concerns. It's going to raise debt concerns because the government is spending more money, and it's going to raise inflationary concerns because not only are wages now getting forced up even more, but again, the government is printing more money. So notice the last two things I talked about here with school shutdowns and unemployment, both of them potentially leading to more inflationary pressures. Not now, don't worry about that, but coming up. Now folks, we gotta take a quick minute here just to talk about today's sponsor, Public.com, where you can get one totally free stock if you go to Public.com/MeetKevin. Public.com is an investing app where you can buy or sell stocks, follow investors, and share ideas. I personally think this is really amazing because you can literally see when somebody says click buy or when they click sell, it shows what their gain or loss was. It's a really cool way to follow folks through a social stock app and get really transparent information. So I love this. You can follow people like me or Graham, my buddy Graham. You can follow me at Meet Kevin. I personally joined Public. You can see my portfolio there if you search Meet Kevin. Portfolio does not sell your data or information like other apps. I personally also think it's pretty incredibly easy to use, which I really enjoy about it. So for example, here I threw in funds into SoFi. It's easy. SoFi's up 8% today. Great. I've got about $76,000 in SoFi over here. And when I go to trade, it's super easy to invest, buy, or sell, deposit different amounts of money. You can buy in fractional shares if you wanted to. A lot of different things that you can do with Public, which is really awesome. And again, you get the opportunity to share your commentary and feedback publicly, which is super fun. So folks, obviously in this video, we're gonna be talking about some stock ideas, so stay tuned for those. But while you listen to this video, go to Public.com/MeetKevin and get yourself a free stock. Now, the next thing that we have to pay attention to is the potential fear that lockdowns will slow our recovery in solving the chip shortage crisis, the vehicle shortage crisis, or fixing and solving freight costs that have gone to the moon. The reason for that is if more people are on unemployment because their kids aren't going to school and they can't work in shipping yards or freight yards, and it's harder to ship things faster, again, guess what we get? More inflationary pressures. If we think lockdown talk is going to start extending to factories again, guess what? More inflationary pressures. It's going to be messy, right? Now, at the same time, if Delta skyrockets, we're probably going to have a hole in inflation. This sounds kooky because we're literally talking about all of these things setting up for a potential inflation skyrocket again, right? But consider this. Before inflation goes up, if we go into a Delta curve, we're very likely to see this high inflation that we have right now, you know, the 4.9% or the 5.1% or whatever. We go into a Delta-style fears of lockdowns. We're going to see crude oil prices come down. We're probably going to see at least some spending decline, especially if we do start restricting air travel and things like this again. We could actually start seeing inflation inflect down much faster than we previously thought. But if it inflects down faster than we thought, there's also the risk that it ends up coming back with a vengeance after, because guess what we did? We took on more debt. We extended unemployment payments. We made the supply shortages worse, and we slowed all that crap down again, right? So I think the biggest concern for the next few months is not a skyrocketing in inflation, not yet. A bigger concern is what happens with fear around lockdowns and Delta. Then after that, we're going to shift right back to inflationary concerns. All right, hopefully you're still with me. I'm going to summarize this in just a moment. But now, we've got to consider. We've got lots of fear so far, and fear is an issue, right? Ultimately, if we get Delta, we'll probably see a delay in the tapering at the Fed. We'll see more borrowing, more bond buying, right? All things that are going to hurt inflation in the future. Right now, market already appears to be pricing in the fact that the Fed's going to be coming to bail us out. Look at 10-year Treasury yields. They're at like 1.2%, super, super low, which potentially implies that, Fed, y'all think you're going to taper. You ain't going to taper anything yet. We got to get through Delta first. Okay, market kind of reiterating so far. So now what I've done is I've given us a ton of facts and data about what happened last time and numbers and statistics. Then I've given you some concerns about things to look for. Now we got to pull this all together. All right. So in a very, very simple way, the first thing we want to be concerned about is lockdown talk. And then actual potential lockdowns or shutdowns or extensions of stimulus or whatever, those are going to increase inflationary pressures. Shutting down manufacturing, shipping yards, airplanes, whatever, that's going to increase inflationary pressures. If we only have lockdown talk and no shutdowns, that's best case scenario for inflation. So lots of lockdown talk is going to give us a depression in prices for recovery stocks. Actual lockdowns will not only give us a depression in prices and recovery stocks, but also give us more inflationary fears. A little bit of an issue. Okay, now we're going to draw real conclusions here. These are my conclusions. And I know this is a lot to digest, but conclusions. Number one, I do not believe that tech stocks or EVs are going to suffer substantially during Delta. In fact, I personally believe that tech will be the recipient of a rotation to safety that'll be accelerated by lockdown talk. So phase one, lockdown talk, right? Next thing, I also believe that the stock market will continue this rotation to safety on the presumption that Delta is coming and not knowing how bad it's going to get. It's the thing. We have a lot of fear. We don't know how bad Delta is going to get, so it's very possible that we get this flight to safety that just continues and continues and continues until we get more data. If we start rounding the corner on Delta and lockdown talk goes away and evaporates, then that might be the perfect moment where it's time to pick up recovery stocks. But over the next few months, while we try to get all this data and we try to start unpackaging what's going to happen, I think there's a good chance that tech and EVs are going to do very well. And for the time being, I think inflationary fears are going to take a backseat to Delta. Now, if inflation inflects downward because of all of this, again, tech and EV should do well. So, piecing the puzzle together, and we can even take a little piece of paper here to clarify this because I know there's a lot we've talked about here. So, let's do this. Let's draw a little thing right here. Lockdown fears. Lockdown, or we'll put lockdown talk, means inflation takes a back seat, and instead we have a flight of potential safety. So I'm just going to put flight to safety, which is probably, in my opinion, tech and EV. And this is at the same time as Delta is going up. So Delta is going up, lockdown talk happens, inflation takes a back seat, and we have a flight to safety potentially to tech and EV. As soon as Delta starts going down, then immediately lockdown talk is likely to evaporate. And now we get to this place where we have to, this lockdown talk goes down. Now we get to this place where we go, okay, where did we leave off? Did we get lockdowns? Did we get shutdowns? Did we get more inflationary pressures? Or do we just pick up where we left off? That's possible. But that is when I believe there's going to be a potential rebalancing again, where maybe you want to get out of some tech and EV, and as soon as this inflection point happens, as soon as that turn happens, maybe you hop back into some form of a barbell portfolio that people talk about. And this is where you're probably going to want to set up some kind of clean portfolio. Now, make sure to follow me on public.com and also download the Public app, because I probably won't be buying options. I'll probably just be buying shares, and then you can watch me trade on public.com. Go to public.com to download the app, and then you can follow me on the Public app. I'm at Meet Kevin on Public. But anyway, what I'd be looking for is some kind of diversified basket of probably 20 to 30 different recovery stocks. The reason I'd want to do different recovery stocks is because remember how earlier I said we're going to have probably already had enough stuff. We've got enough dishwashers and Apple and things and products. We're going to go back to services. And so going back to, in fact, that might even mean when we look at tech and EV, we want to specifically pay attention to potentially services rather than something like an Apple. Maybe we're a little bit heavier into something that's more like a service, like a Google, right, over Apple. Who knows? It's just an idea. Okay, now 20 to 30 recovery style stocks. I'm not going to list them all here, but think some that we might put in here. We might put CCL in here, Carnival Cruise Lines. We might put Dave & Buster's in here. We might put Norwegian Cruise Lines in here. NCLH, Norwegian Cruise Lines Holdings. There we go. We might put Cheesecake Factory in here. We might put Nordstrom's in here or Macy's in here, although these are going to be a little bit more in that product direction again, right? So personally, I'm probably going to prefer things like Wynn Resorts and things that are more service-based once we get out of Delta, once we hit that inflection point. So remember earlier in the video, we talked about maybe staying away from stuff. I'm going to do the same thing with tech and EVs, even though I know EVs are a form of stuff. But also, when I pick my recovery basket, I'll probably pick 20 service-style businesses to really throw some money into once we transition from all this peak fear, just fear, not actually cases, but fear over, oh my gosh, Delta, lockdown talk, blah, 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 blah. And at this point, that's when I want to switch over and get into a nice recovery basket. And I'm not going to dump all my tech and stuff. I've really already been kind of closing out a lot of my call options on tech. Even though I think tech can do well, implied volatility has been plummeting. So I'm kind of trying to close out call options as much as possible, and I'm hoarding cash, and I haven't really been buying unless I see a big opportunity. I did buy the Robinhood dip when we dipped down to 34.21. I sent an alert to everybody in the Stocks and Psychology Money group. I'm like, I'm buying Robinhood. Some people are like, oh my gosh, how could you buy Robinhood? It's down 10% today. I'm like, exactly. But anyway, so these are some of my thoughts right now in terms of where to put money. Now, I do want to talk about crypto a little bit. Make it clear also, none of this is financial advice, right? We're just playing the game of the market right now. So, what do I think about crypto? Well, I have a long thesis on crypto, especially Ethereum, ADA, and Bitcoin, and I think they're going to do very well in 2022. If we end up getting more stimulus packages under the guise of bailing out Americans because of COVID 2.0, aka Delta, then I think crypto could do very well. Crypto last year at some parts seemed to trade with tech until about November, when it really traded with the $600 and $1,400 stimulus packages, and we started having inflation fears come back. So in fact, possibly a better thing to do is when we go over here and we start, inflation takes the back seat over here, maybe when inflation takes the front seat again over here, this is potentially when we go back into crypto. Now, recently, I've already bought the dip around 29K Bitcoin, 29, 30K Bitcoin. I've been sending alerts for that. Sitting here at 39,000, 40,000, not that enthused about loading up on crypto right now. So, those are some thoughts about crypto as well. Either way, after this Delta madness, once this whole thing is gone, it's very possible we're going to taper with the Federal Reserve quickly and U-turn for a position where potentially rates start moving up by the end of 2022. That potentially is going to weaken tech and the euphoric rally in tech, weaken high value stocks because finally the taper is happening and finally rates are going up, which means we're softening future earnings at tech companies. But that all happens later. So let's draw that on the sheet really quick. So if we go in sort of this phase one over here, let's call it. Phase one, lockdown talk, inflation takes a back seat. We have this flight to safety, tech and EV, specifically services, less stuff. And Delta goes up under fear. That might be phase one. Phase two would be having a recovery basket over here. Lockdown talk goes away, Delta goes away, tech and EV start rotating down, but the recoveries do well. Inflation comes back to the forefront. Because inflation potentially comes back to the forefront, depending how bad things got, it's very possible that the Federal Reserve is going to taper quicker than expected, and ultimately we see that rate increase. Rates go up at the end of 2022. So I'm definitely going to want to be away from like tech options and things like that. But and I probably won't play recovery options because I'm probably just going to want to hodl these things. But we'll see. So those are some of my thoughts. Let me see if I wrote down Any other particular notes here? Nope, that's it. Okay, great. We did very well. Go to public.com/meetkevin. Thank you very much for watching this video. I appreciate you. This was a lot longer than I expected it to be. You're amazing. You rock. Thank you very much, and we'll see you in the next one. Thanks. Bye.